Who is eligible for a reverse mortgage? In Canada, we have two lenders that provide reverse mortgages to seniors. Both lenders have the same age requirement to apply for a reverse mortgage, which is 55 years of age, and the maximum equity available from your property is 55% of the appraised value. The age of 55 is a firm number with both lenders. The available amount of equity does vary based on a few factors. Firstly, an appraisal is done by a certified real estate appraiser who works with one of the two lenders providing reverse mortgages. The lender will lend up to a maximum of 55% of the appraised value. They do not take 55% of your current property assessed value, as that figure is not always current and up to date. Once they have determined the value of the property, other factors come into play determining how much you will receive in your new reverse mortgage. One of the factors is your age. Another one is your gender. The older you are, the more reverse mortgage will give you in equity. Typically, the sweet spot for this product is over the age of 70. If it is a husband and wife applying for a reverse mortgage, both applicants must be at least 55 years of age. The age of the younger spouse will affect the amount available, and also if it's a single male versus a single female, the male may result in a higher amount for the same property, as it is determined that men live longer than women. Another factor is the location of the property, the type of dwelling on the property, and the overall marketability of the property. So let's start with the location of the property. The location of the property must be in an urban center. It cannot be a rural property or an agricultural zoned property. It must be the applicant's owner-occupied principal residence, and this can either be a single detached family home, an apartment-style condo, a high-rise condo, or a townhome. The marketability of the property means if the property were to be sold on the market, how much interest would the property garner if it was for sale? For example, if it was a single-family detached home in good condition but located on a busy highway, this would get a lower score under marketability, as it would not attract a large number of people wanting this property. If it was a single-family detached home in good condition located near many conveniences and amenities, this would appeal to a larger market. A single-family detached home with great marketability is going to net a larger reverse mortgage, with of course taking into consideration the age of the borrowers, the marital status, and gender. For example, a $1 million home in Greater Vancouver with a male occupant, 70 years of age, can possibly get a chip reverse mortgage for 40.9% loan to value, versus a 7-year-old female in the same home will garner 38.7% loan to value, and a married couple in the same home will garner approximately 35.6% loan to value. The longer lifespan occurs when you're married, and also having a reverse mortgage for longer nets a slightly lower amount. All of these factors above are placed into the algorithm to generate an amount available for the reverse mortgage. Let's discuss who is not eligible for a reverse mortgage. You are not eligible for a reverse mortgage if you do not meet the minimum age requirement of 55 years of age, or if you do not own your principal residence with a fair amount of equity in it. You will not be eligible for a reverse mortgage. It doesn't mean you won't ever be eligible, it just means at this current time you are not eligible. Other family members, such as your children, even though they may be adults, they are not eligible to apply for a reverse mortgage or be on title of your reverse mortgage if they do not meet the minimum age requirement of 55 years. If you happen to pass away and your property has a reverse mortgage on it, and you've left your property to other family members, they will not be able to assume the reverse mortgage, as they will not meet the required criteria. At this time, they would be able to take over the property with another type of financing, such as a traditional fixed or variable mortgage. It is safe to say, in most, if not all circumstances, a reverse mortgage is not an assumable mortgage for other family members to take over. A surviving spouse on the current reverse mortgage can remain in the home if one spouse passes away without the reverse mortgage having to be repaid. This is a very important point to keep in mind when you are looking at your financing options as a senior and possibly considering a line of credit, which is essentially a demand loan. This means the bank can call your line of credit to be paid immediately if one of the spouses passes away. A key benefit of the reverse mortgage is not having the regular mortgage payment or the line of credit interest payment required while you live in the home. Another key benefit is the proceeds from the reverse mortgage is tax-free cash, and it does not impact your government issue pension income. Another benefit of the reverse mortgage is the interest is compounded semi-annually like a regular mortgage, opposed to a line of credit where the interest is compounded monthly. If you would like more information or a free consultation to see if a reverse mortgage is a fit for you, you can contact me below. And as a certified reverse mortgage specialist, I would be more than happy to review your financing options with you and provide you with expert advice to guide you home.